everybody doing? So I hope we're all having an awesome day, awesome weekend. This is 50 pips in the house, 06/04/2014. Not making any trade calls or recommendations because you and only you are responsible for the trades you may decide to take. The fact you're listening to this means you've read, you understand, you accept. All the disclaimers here on the website, understanding that we're just performing some technical analysis in a learning context for educational purposes only. So what's going on, guys? Let's keep this as short, as sweet, as simple as possible. I think the main focus here, really, we can't go into the review without talking about the equity side, right? So we kept on talking about the fact that the ES was stuck inside this 1900, 1850, 1800, and we were waiting for signs of weakness. We felt that if we were going to get a correction, it had to come from a higher level. We had to fail from a higher level, and we were looking for this to try and grind higher and move right back into those previous highs and fail somewhere into there in the 1900s. Okay, so we had very nice. We just pierced through these highs. Beautiful little reversal candle on the 4 hour. Bam, reverse right back down. So again, going into the week, this is a very nice reversal, but keep in mind that all in all, not a lot has changed. We're still trading 1900, 1850, 1800. We have to see some aggressive weakness below 1850s, ideally quick on Monday, move below, daily close below to open a move for a nice retest for a move back into the 1800, but we're globally still stuck inside this range. Watch these 1850s as the pivotal level for the week. Now, what's really interesting is we kept on talking about the NASDAQ, saying that NASDAQ was really the non-conforming, NASDAQ was weaker, and that was really the where we were keeping a very close eye on to see for what was going to happen. And we talked about this zone to the upside, and again, as we said, right, if we break above, look for it to make a run for those highs. But this is the level that had been defended repeatedly, right, and that this is where the shorts had to make their move, and this was holding much weaker than the NASDAQ or the Dow, and that if we could not break above this, we'll look for signs of weakness to basically look at taking some kind of position on the Dow or on the ES, but at least still confirming that this is a weaker pair and that was more downside to come. So bam, moved down. I think we closed the day down about 2.5, 2.6%. So very nice move to the downside. So keep an eye on the NASDAQ this week. Again, is it going to continue to stay weak, and is it going to continue to be a leading indicator for it? Again, I think the way this closed, I would not expect this to reverse aggressively. I would expect to see some fall through here, and what I'm looking at is, keep in mind, this base support now is going to be the pivotal level. This is the pivotal level to watch for the week. If we can hold a bid, then we could still see some sideways chop, some wheeling and dealing inside this previous zone, right? And only above this zone, above the breakout, do we have pressure off. But if we start trading back below, especially early in the week, well, then I would not be surprised to see us moving and continuing to trade very aggressively for at least a couple of days for a move back into 3410s, okay? So we'll have to see what happens, but the charts are in play. The levels are the same. So far, so good, moving nice. And again, you can look at that also on the YM. You saw very nice little, both on the 4 hour, very nice, moved above those highs. Pierce, we said we need to fail from a high level. Bam, we press higher, failure to attract new buyers at highs, reversal, bam, rolls back down. So again, very nice. Let's see what's going to going into the week. Very important. Again, would expect to see some fall through on the short side. Let's see what happens. But again, the charts are the same. They're all on the blog pretty much, and the levels are nothing's really changed. So it's going to be very interesting. Then in terms of, again, looking at that, what's happening on the JPY. So we see this USD JPY pressing higher and then getting sold relatively heavy. Again, keep an eye for how we behave. I mean, really, we're stuck here at those 104.10s, and the downside, we're looking basically at this descending trend line and this previous chop zone support here coming in pretty much at 102.70s, 102.80s. If you actually take a step back on the chart, you can see that this is really important. You know, it's trying to make a move higher, and it needs to hold. It needs to hold this breakup zone, right? As long as it holds that, well, then we could see some more aggressive upside. So look at this whole area we've been talking about in the past. Again, the chart is on the blog. to give you an idea as a bull bear line going into the week. And again, it's very similar across the board. Same thing on Euro JPY. So we moved back down, actually failed to make a higher high there, and it's moving right back down into that pivotal zone we discussed. This was a massive chop zone, so keep an eye on how we behave. Closes outside the blue zone will probably guide us on which way we're going to get more momentum or more flows. But if we start to close below, what we're looking at is basically potential for a retracement all the way back down into the 139 level. If we close back above, then we expect continued bid tone for a move back into 145, 144.80s, 145 level. Now, in terms of gold, we forgot gold again. Our base scenario was for a move back into those 1300s, and we expected it to try and find a bid here. We have confluence of basically this is a 50 back of the move off those lows, and we had that 200-day. We said, especially looking at the way the Nasdaq was trading heavy, we said, you know, don't forget gold, right? Especially if the weakness we're seeing coming through on Nasdaq is going to manifest itself through the other equity side. We'd expect this to catch a bid, and if it's going to catch a bid, this is a good place for it to do so. And watch for daily closes back above that 200-day, back above that 1300, to show that this is trying to stabilize, put in a shorter term bottom, and going to try to make a run back into the 1350s. So again, keep an eye on equities. As long as the equities stay weak, we'd expect this to continue to grind higher, make a move back towards those 1350s, but this is a key support that is holding, and as long as it's holding above that 200, as long as it's holding above that 1300, we consider the range to be intact, and the range is 1400, 1350, 1300. Okay, no change on gold. What else have we got? So looking at some of, since we're talking about gold, let's look at some of the commodity currencies. What's going on CAD? Again, very crowded trade to the long side, being very difficult not to make money to the long side, and now we've retraced right back down into a support. What's interesting here is this is a beginning of a support. The only thing we wanted to say is, again, keep in mind that it doesn't necessarily have to catch a bid here, but even if it breaks lower, there are a lot of other areas where it can find a bid. So this is the first support zone, again, with protection of this 100 moving average on the daily. This is the first area, but if we go into the week and you see this trading below the 0900, then we might see some unwinding of what we consider relatively crowded trade here, and basically would not be surprised to see a move all the way back down into the 07s, right? I think it's a bit premature to talk about that for now, so keep an eye on the daily chart. Daily close below the 109s. We'd expect this to get a bit more traction to the downside, try and make its way back into the 107s. As long as the day closes above those 109s, above that 100, we'd expect it to still hold a bit of a bid tone, so sideways chop to bid tone, okay? Going on to Aussie, what's going on Aussie? So again, it's holding a bit above that 200-day moving average, above that 9160s, pressing those highs. Again, for us, there's no big change. The 9330s is the pivotal level. As long as it holds below, we don't get a daily close below the 9330, we'd expect this to stay relatively choppy inside this 9330, 9160 zone. If we break back above that on a daily close basis, we'd expect this to try and make a run all the way into the 95s 20. Again, we don't necessarily expect this to make an aggressive run without the RBA. You know, we've got some RBA news on the wires this week too, so without the RBA trying to talk this down. So this is not one of the pairs we are too interested in terms of big swing moves. We expect this to stay relatively choppy pretty much around these areas, right? You know, 91 base support to the upside, maybe 9330s now to the upside. Just kind of stuck here for now. Let's see what happens. And again, if you're looking at Kiwi, what's happening on Kiwi? Basically, we've seen the retracement similar to CAD to a certain extent, but it's been a lot more range bound. But we've had a retracement back into the base support. We expect to get bought if it was going to continue to move aggressively to the upside or try and keep the rotation to the upside. So look at those 85.10s. As long as we close above 85.10s, we expect this to continue to try and take stabs towards the 86.70s, 87.00, which was that very nice shorting area we discussed. Basically, it was a key zone. You can look back also on a weekly. You see this was a very, very, very important level, and signs of failures right here was clearly a very interesting short play, right? Basically, it failed aggressively at that level before. We talked about that last week. And if you see this going back onto the daily, basically protection of that 8700, we come into it, negative close on the daily, hovers here, tries to take out that 8700. It can again, another negative close on the daily, nice little retracement to the downside to get long into support. So let's see what happens, but we're a bit stuck in the choppy zone here, but it's still trying to hold an upside rotation. And what's going on the euro and cable side? Well, if you're looking at basically cable, what's going on cable? So we talked about basically when we moved down, we said don't get too excited to the downside unless we get daily closes below 6450s. That 6500, 6450s is a key zone to hold the upside rotation. So as long as that holds, we expect this to try and continue to rotate to the upside. Right now, we see it as a very big chop zone, right? These highs and these 6450s. So unless we close below 6450s on a daily close, we expect this to stay sideways chop to try and continue to rotate to the upside. I mean, clearly, it's a bit heavy, also maybe a bit of a crowded trade. If you look at it on a 4-hour chart too, you can see that it's having a bit of trouble to the upside as the downside keeps on pressure is still on the downside. So right here, the way I'm looking at it in terms of a tighter range, you see we caught a bid here at these 65 50s, and we're trying to catch a bid here again. So this is kind of what I'm looking at. As long as we hold this into the beginning of the week, I'd expect this to try and move back into those 6620s. You can look at past updates. Those 6620s have been pivotal, really important point. And then that will be a bull bear line in the week. If we open tonight and start to hold below those 6550s, then I would expect this to try and test 6500s going into the week. But those are pretty much the levels I'd be keeping an eye on, right? Then if we're looking at Euro's trying to hold this upside rotation, and again, those 36 50s to the downside are really, really important. So it's trying to hold an upside rotation. A lot of people will be talking about here, we've got that 100-day moving average is holding. You've got the 200-day moving average that's coming in pretty much in line with these swing lows. So in terms of base support, look at those 3650s. If we start trying to take a stab at those very quickly in the week and we get daily closes below 3650s, then I would not be surprised to see this try and take a stab at that 135.00, 134.50s. But unless we get a daily close below the 3650s, I expect this still to be sideways chop to try and take stabs to the upside. And if you go and if you flip and you look at something, maybe let's say 30-minute chart or something, that's the trading range we've been working with and we're looking at, right? The tight range is the 38.00 to the upside, where tried to press above it, but we couldn't attract new buyers at highs, only attracted selling, profit taking here at highs, and we couldn't get any traction above. So that's basically the high range. And then the low end of the range is that 37.00, and we haven't managed to really get traction below. So we consider this the trading range going into the week. So it's 37.00, 37.50, and 38 to the upside, with basically the outer zones on breakouts that need to break to confirm the breakout side of this trading range, which essentially is the 38.50 and the 36.50, which we discussed when we're looking at it in terms of a bigger picture. So don't get confused if we get a break outside this tight range, which is the 38.00, 37.50, 37.00, because those other barriers, which we call 38.50 and 36.50s, are really, really important. So it's a fairly big chop range. So keep an eye, unless we really get daily closes outside this, this will probably continue to chop around in this area. So again, trading range and the bigger range for the week in terms of more momos and flows. So that's what we're looking at. I hope everybody's having an awesome weekend. I hope everybody has a great rest of the weekend wherever you may be. Again, if you like the content, don't be shy about sharing it, liking it, or retweeting or whatever. I hope you guys enjoyed it. Take care, and I'll see you guys tomorrow for London Open on Twitter, okay? Take care. Bye-bye, guys.